and welcome to Closing the Insurance Protection Gap from Enhanced Relevance to Increased Resilience, an event organized by BJD Reinsurance Consulting, an organization in consultative status with the Economic and Social Council of the United Nations. This event takes place on the occasion of the high-level political forum and high-level segment on sustainable development and the 2030 agenda. Just some basic rules for the good order of the discussions. During the event, the participants will have the mic closed. The moderators will open the microphones to the speakers when they have to talk. You can comment using the chat facility of the Zoom application or the raise hand function. For an easier identification, please keep the video camera open. We wish you a fruitful discussion. And in order to start our program, I would like to offer the microphone to Mr. Bogdan Dumitrescu, founder and CEO of BJD Reinsurance Consulting, an organization in consultative status with ECOSOC, and ambassador of the Insurance International Society to Europe.
Wonderful. Thank you, Mihaela. I hope everyone is hearing me. I will be very short because we have a tremendous panel here of great speakers. So even though the passion on the subject is deep for me, allow me just to say a few words, to only have a very short say here and share a few of the questions that I struggle with for some time now, and shortly to leave the space allowed to our guest. I would like to thank you all, each one of you, for having accepted our invitation to share your thoughts. So, insurance industry is losing relevance. I heard that sentence in September 2012 at the Reinsurance Rendezvous in Monte Carlo almost 8 years ago. Mike McGavick, who hammered that sentence, he was the CEO of XL Insurance at that time. He was not the only one who mentioned that. But what has been done since then? Well, at the end of last year, 2019, for the fourth year in a row, global insurance growth lagged behind the expansion of economic activity, and as a direct consequence, widening the protection gap. Protection gaps, insurance gaps, investment gaps, how do we seek coherence in closing those gaps? Financially, here and there, safety nets are created in partnerships by the small states in Atlantic or Pacific Oceans. Also to be mentioned, initiatives like the Insurance Development Forum, Insure Resilience, with the help of governments, international organizations such as the UNDP, the World Bank, the multilateral development banks, and many others on all continents, mostly in developing countries. How can we secure and link the cliffs around the precipice would be also appropriate. And first, why do we have such gaps? Is it because products and services are better than ever before and we don't need coverage? No need of insurance? No more risk? No pandemics? No cyber? No business interruption? Are we poorer? Are we safer? Are we less impacted by events? Do we recover quicker? Are we more resilient? Are we in lack of imagination or innovation? What should drive a global engagement? The mechanism, the technologies, where do we need to start? We have already started in a way. 10, 12 years ago at the World Economic Forum in Davos, these were the topics in discussion in those rooms, crowded and packed with experts, government representatives, representatives of the business sector. What was missing to massively engage? Maybe core values. For the last months, that already appear as an eternity for me, and I'm sure for a lot of us, we are continuously learning that our own health and well-being depend on the health and well-being of others. Others' health and well-being depend on our own health and well-being. Sense of behavior looks to be the key. Understanding, feeling, putting empathy first. Making, or let us be generous, keeping empathy great. Again, maybe would you expect me to say, let us just globally start. We know that nature abhors a vacuum. So whatever we decide for us, our actions toward closing all those gaps, protection gaps, will have an impact on us and on the future generations. Allow me to quote here, approaching to my final remarks, allow me to quote Marx, but not Karl, not the bearded philosopher, but Groucho, one of the funny brothers. He has been heard saying, "Why should I care about the future generations? What have they ever done for me?" To respond to that, Hubert Védrine, well-known French diplomat, recently noted that for several months now, for the first time in history, all human beings were afraid, more precisely, were afraid of the same threat at the same time and everywhere in the world. So we might have here a beginning of the response to the previous question. I'm now carefully listening to our guests for their insights. So thank you very much for being here with us, and I will be very carefully listen to all of you. Daniela, the mic, the cam, and the screen are yours.
Thank you very much, Bogdan, and welcome once again to everyone. I have prepared just a few slides, continuing somehow the ideas launched by Bogdan a couple of seconds ago. I would like to start with a quote coming from John Dalberg Acton that he was saying some century ago, like this: if some great catastrophe is not announced every morning, we feel a certain void. Nothing in the paper today we cite. Okay, this was 1 century ago approximately, and since then, at least in what is concerned the NatCat events, their frequency and their severity is increasing. And more than that, there is a new characteristic brought by the globalization of the world, by the highly interconnected world that we are living in. Namely, if then there were local events with local consequences, now local events can for certain produce consequences globally in business chains, even in social ways. I would like to touch just 3 categories of risks that from my perspectives are very important today, although there are many others may be worth considering. First of all, NatCat. This is day-by-day reality. Almost every day we are hearing about large floods, hurricanes, earthquakes, lots of big events with real catastrophic potential. And what is interesting and sad at the same time is that although the average loss figures are increasing every year, the percentage, the share of the insured losses, it's more or less the same all the time. So we are, although we are buying maybe globally more insurance, in fact, in ratio to the losses and to the exposure, we are not buying really more. I have put in this slide graph coming from the latest report made by Air Worldwide, and you can see very easily that practically the proportion of insured losses relative to the insurable losses is lower and in fact worsening for the most severe events. So when we have a real potential of global catastrophe, then we are more exposed in reality. The events, the weather events is especially, which are of, let's say, regular severity, are better covered than those who are really, really very strong. Also, this ratio is worse in the areas where people are poorer and the economies are weaker, which is another factor increasing the potential consequences. Okay, the insurance industry is in search for solutions already from decades, and lots of things have already been put in place, but none of them is a one-size-fits-all solution, and none of them is covering really the entire dimension of the protection need. There are mandatory solutions of protection which are of a questionable efficiency. Some are working better, some not. There are semi-mandatory systems. I'm referring here at the systems used in Spain, even in France, of adding nat cat insurance to the regular voluntary property insurance, which seem to be, at least in some countries, more effective. There are micro insurance or other inclusive insurance solutions, but these are mostly fit for markets where the large numbers are applicable, like India, some African countries, Pakistan, I don't know, China, and so on and so forth. But what is good for little countries like the East European countries, let's say, where the coverage is very low, but the market doesn't have the characteristics which could allow introducing these solutions in an effective manner. Okay, there is also parametric insurance, mostly for agro-insurance. There are lots of digitalization tools that may help access and awareness, but overall, although all these steps have been taken and are taken every day more and more, closing the insurance gap is a task larger than the resources of the insurance industry. There is the need, and everybody says like this, there is the need of cooperation between the industry, the public system, and so on and so forth. So it needs a holistic approach. Leaving the NatCat, I will stop a little bit to the cyber. This is a fast evolving risk, and these days in the pandemic condition, in working from home and everybody adopting very fast digitalization solutions, have proven that this risk has a very strong capacity of creating really important losses. Also, there is still a low awareness regarding the cyber risk. Usually the policies in place are covering the basic risks, but not the more complex ones. Some of them are really not easy to understand or to model or to assess for each entity. And in my opinion, cyber risks really have the potential of creating global catastrophes. I'm thinking just of, let's say, a successful cyber attack, which would incapacitate some energy sources or the basis of a large supply chain that may end in consequences worldwide. And finally, the pandemic risk, the new inferno, I called it, because these days we have a live demonstration of how much it can impact our lives. According to estimations at this point, the reinsurance or the insurance industry is expected to see losses up to 150,000 billion, but it's still too early to really assess the potential loss. Most of these losses are coming from travel policies, from event cancellations insurance, from health insurance, etc. But a very, very important problem is still on the table without a real and clear solution, which is the business interruption caused by such an event like the pandemic. Also, in this case, the prevalent opinion is that only a solution may come only from a cooperation between governments and the industry, and gathering forces and resources could really put in place a viable and sustainable solution in this respect. To conclude, it is clear that insurance itself, I think nobody can argue with this, is not sparing us from the losses, is not preventing the risks to act, but it can provide people and businesses the financial capacity to recover, to reconstruct, to restart. And even there where insurance is not feasible or cannot be offered in affordable condition, still it may play a very important role because of insurance capacity of knowledge in modeling catastrophic events, in assessing means of hazard mitigation, of risk management, in helping public authorities to design disaster recovery solutions and so on and so forth. Hence, this is why insurance in the end should be looked at as a solution not only for its financial role, but also for the knowledge that can provide. I'm closing with another quote, this time from Mr. H.G. Wells. He said, "Human history becomes more and more a race between education and catastrophe." Maybe in our case, we could say it becomes more and more a race between knowledge, awareness, and catastrophe. And to the insurance world, it is one of its important roles to provide both financial capacity and knowledge. This being said, I'm stopping here. In fact, I'm not feeling in the real position to advocate for insurance better than you, our guests. And I would like to invite the next speaker, considering that we are under the auspices of the high-level political forum on sustainable development goals with the United Nations. I think the best start in our discussion could be made by Mrs. Cristina Maria Alina Popescu. She is a ministry counselor in the committee and the ECOSOC delegate permanent, the United Nations. So, Cristina, the mic is yours, and please tell us from your perspectives and your activity within the United Nations delegation, what is your opinion on the topic today?
Thank you, Daniela. Thank you very much for the kind introduction, and thank you very much, Bogdan, for organizing this timely event. I have the pleasure to welcome you today on behalf of His Excellency Ambassador Ion Jinga, the permanent representative of Romania to the United Nations. Without being a specialist in the theme of the insurances, I would like to say a few words about the COVID-19 pandemic and Romania's efforts to fight it. The High-Level Political Forum is the main United Nations platform on sustainable development. It is mandated to review progress on the 17 Sustainable Development Goals and assess progress towards achieving the 2030 Agenda for Sustainable Development. 2020 is the first year of the second cycle of the HLPF. The agenda for the 2020 session, however, was altered to focus on the impact of the COVID-19 pandemic on the SDGs. Romania has presented its voluntary national review in 2018. This year, 47 countries are presenting the VNRs, with 26 countries presenting for the first time and 21st country presenting for the second and third time. Out of the 46 main messages of the HLPF, 39 address COVID-19. They highlight that COVID-19 can adversely impact progress in implementation of SDGs and disrupt development efforts and progress achieved. We need international assistance based on global solidarity, especially for developing countries and least developed countries. We need a coordinated approach and a cooperation by all stakeholders in the society. The VNRs also describe the health measures undertaken to combat the pandemic, the socio-economic impact and measures undertaken, and the impact on consultation with stakeholders in preparation of the VNRs. The UN Secretary General Antonio Guterres said last March, everything we do during and after this crisis must be with a strong focus on building more equal, inclusive and sustainable economies and societies that are more resilient in the face of the pandemics, climate change and the many other global challenges we face. The COVID-19 pandemic and the global recession it has triggered are causing immense human suffering all around the world. It is our duty to work for recovering and building back better to deliver sustainable development. As the UN Secretary General pointed out in several occasions since the beginning of this crisis, unless we act now, we could face years of depressed and disrupted economic growth. Those who suffer most will be less equipped to respond. Extreme poverty and hunger will increase considerably. Healthcare systems in many countries are already on the edge. Children are missing out on their education. We need to make sure that developing countries will have the resources to be able to rescue their economies. We need concrete, radical and implementable solutions. This is a human crisis and also became a development and financing crisis. Developing countries face vastly increased demands for public spending exactly at the same time as tax and export revenues, inward investment and remittances are dropping. The G20 debt service suspension for the poorest countries was a welcome start. Beyond the fiscal shock, the COVID-19 crisis has impacted all the components of the external finance, direct investment, exports, and remittances. Official development assistance is under pressure as developed countries themselves deal with the fallout of the crisis. Romania supports the need for the implementation of the 2030 Agenda for Sustainable Development, both at national and international level. We continue to have an active presence and to develop programs based on the principle of the 2030 Agenda, now even more within the context of the European Green Deal, the engine of the economic recovery at the EU level. Within the EU, Romania supports an equitable distribution of the packages Team Europe and the countries of the Eastern Partnerships, Western Balkans, and the Southern Neighborhood, especially from Africa. To answer the EU call, Romania rechanneled more than half of its official development assistance and humanitarian project for 2020, managed by the Romanian Ministry of Foreign Affairs and the Romanian Agency for International Development Cooperation, giving priority to the most vulnerable by strengthening the institutional capacity of the health systems in the beneficiary countries, food security, sustainable water management, fighting fake news in the context of the pandemics. The MFA and raw aid efforts are channeled towards partnerships with the private sector and NGOs in projects aiming to fight the COVID-19 pandemic in the EU neighboring countries. I will stop now and let you get into the discussions, and I thank you very much for your attention.
Thank you very much, Christina. So this is, in my opinion, the broad political perspective, let's say so, and to come to a more local perspective and to maybe to some concrete examples of actions, I would kindly invite Mr. Laszlo BORBELY, a very well-respected Romanian politician. He is state councillor in the government of Romania, coordinator of the Department for Sustainable Development in the General Secretariat of the government. And I think Mr. BORBELY can give us a more regional and, of course, Romanian image on the advancement of the implementation of the Sustainable Development Goals. Mr. BORBELY, the mic is yours.
Thank you very much, and thank you very much for your invitation, especially for Bogdan, who invited me. And I have to tell you that I don't know if you are watching me, I am in a car traveling to my hometown, so excuse me for this one-man show, but I tried to, I was very interested to be in this, very important meeting. So we are speaking about COVID, we are speaking about this pandemic area. You know, it will be, nothing will be the same like before. We have to recognize it. And we have to reshape, we have to restart our strategies, we have to look around and to have more solidarity, to have more money for our health, our you know, safe status of our people and our assets. And this is the real role of insurance and reinsurance, to have help to economy, to education, to other, I don't know, it's about 11 SDGs in which directly primary or secondary impact of reinsurance is very clear present. So in Romania, as my colleague from the representation of Romania in New York, and she's a very good colleague of me, and she helped me very much. We worked together in these 2 weeks in New York because we had a HRPF and a very active HRPF beside of this, you know, online approach. Basically, if we are speaking about insurance industry and how we can build more resilient world, because this is the main issue which we are speaking about, SDGs and the implementation of 2030 agenda. Now we have a new chance and for a new change of the world. And if we are looking to the 17 SDGs, to these 169 targets, it's clear that we have to put them in a system. Otherwise, we'll be just pieces like, do you know the Rubik Cube? Pieces without connecting one to other. And there are basic principles to build resilience for different parts of the society. It's a very good analysis of a German company or NGO, and I like very much because this approach, because they told us, and it's very clear for me that it's based on a very deep analysis. There are six SDGs primarily linked to the insurance. Is the first one poverty, of course. It is the second because hunger, our food, our healthy alimentation is very important. Of course, the third, regarding health, regarding well-being. In this moment, it's maybe the most important issue also for reinsurance, how we can protect our health, how we can to prevent, how we can spend more money to prevention and for our infrastructure. We saw how very, developed societies in couple of weeks, they broke out and fell out regarding this pandemic virus. So the fifth, of course, gender equality is also very much linked to this, this part of the reinsurance. Safe place of work and growth, economic growth. The eighth, the climate change is also linked. And there are other five, in my opinion, which are connected, secondary level contributors. Education, infrastructure and industry and innovation, to reduce inequalities, the resilient cities and partnerships. And I would like to tell you, based on the Romania experience, because my colleagues from Romania knows better than me, we tried to introduce a year ago this obligatory insurance of the buildings. And since in this moment is not working like in a very well, preserved society. In 2005 and 2008, between 2005 and 2008, I was in charge regarding seismic risks and floods in Romania, like former Minister for Infrastructure. In a couple of months, we built on that time 1,500 houses for those who lost their houses during the critical floods in Romania. This is the main decision of the government. It was a good decision of the government, or we have to prevent, we have to look where are build this building now. If we are speaking about energy efficiency of the buildings, we will have in Europe a new regulation since the 1st of January of 2021. So, and my last comment, it's the Green Deal. It's one of the most ambitious plan, or maybe the first ambitious plan, which will be for not 1 year, for not 2 years, but for 30 years in European Union, and not just the European Union, I hope. So in this moment, we have an action plan for circular economy. In this moment, we have a strategy, a new strategy for biodiversity. We have this taxonomy, which is a very interesting challenge for the coming years, because this taxonomy is related to private companies, related to green bonds and all this circular economy and financial investments, sustainable financial investment, sustainable investments. So it's very important now that also in this part of insurance companies, reinsurance companies, to change a little bit their view, and of course the governments has to change their points of view regarding this part, to have more safe societies, more resilience, and to build a new, more sustainable society. Thank you very much.
Thank you also very much, Mr. Borbely. Yes, indeed, Romania may be a case study concerning the coverage of NatCat risks. And despite the fact that people are constantly declaring they are fearing earthquakes, for instance, earthquake being a major risk in our country. Still, just 1 in 5 households are covered for this risk. So it's also about education and psychology, maybe. In this note, I would like to invite Mr. Valentin IONESCU. He is Director of Strategy and Financial Stability Directorate at the Romanian Financial Supervisory Authority. And in his capacity, he can tell us very many things about how the Romanian insurance industry is really coping with this challenge of the catastrophe insurance gap, and what can the authority do to help to improve the situation. Valentin, the mic is yours, please.
Hello everyone, thank you for the invitation. Very interesting topic from our side, and also very interesting debate so far. I will start by saying that the long-term impact of COVID-19 on the insurance sector is uncertain. But we can, but also we can expect a number of disruptions at the European level, in my opinion, with potential, of course, consequences in our domestic market. In my opinion, the main risk identified were the decrease in the value of the assets of the insurance companies as a result of the decreases registered by the stock exchanges. Also, the increase in the value of the insurer obligations rising as a result of the materialization of risk due to the spread of COVID-19, of course. Special for health insurance products, temporary work inability, risk of non-payment of debts of the insured. Also, the attached insurance banking products can be affected, and the most affected are the travel insurance abroad. We expect the underwriting risk to increase in the context of the crisis, as a result of the increase in the number of the canceled contracts, as well as the increase in the redemptions paid for life insurance contracts. The FSA also estimates a decrease in the volume of gross written premiums, despite of the fact that the first quarter for Romanian market was a good one. The gross written premiums increase. In the second quarter, I think we'll see the decrease. It will be reflected in at the end of the second quarter results, due to the fact that the isolation measures introduced during the state of emergency affect economic activity, especially in April and May. Both insurance company and distributors representatives expect, according to our market research, they expect a decrease in Q2 of about 20-25% of the volume of gross written premiums in the second quarter, as I said. What we did, in order to assess the impact of COVID-19 on the activity of Romanian insurance company, FSA conducted a consultation in March through which we wanted to see an analysis of the impact that this phenomenon could have on the activity and financial stability of the insurance company, especially for risk profile, solvency, liquidity, etc. Also, we wanted to see a presentation of the type of the insurance, including the risk that they cover, that are in the company's portfolio, which could be impacted by the manifestation of this phenomenon, as well as quantitative analysis of the impact of the exposure of this type of insurance. All of the companies responded to FSA initiatives and provided relevant information on the impact of coronavirus on their activity. But most of the company did not consider it a major impact on their risk profile and financial position. And also some of the company perform additional stress tests, and the result was marginal. Also, most companies are well capitalized, and liquidity and solvency indicators are above the minimum thresholds. From the perspective of the insurance products, most local companies either had the exclusion of epidemics, pandemics, or had a very low exposure for this type of the risk. All companies have implemented business continuity plans, most of which have already included pandemic scenarios. Related to EIOPA recommendations published in March, also FSA issued some rules. One of the rules was to extend the deadline for reporting, publication of the public information, and transmission of other documents to the Financial Supervisory Authority in the insurance field as a result of the situation generated by COVID. This rule is aimed to extend the submission deadline for both Solvency II specific reporting and also for national reporting. At the end, we wanted to support the Romanian insurance company in a context of a high volatility and significant implication for business activity. Also, we publish another rule for all the companies that we supervise, and we allow the electronic reporting, and we create a hub for electronic reporting. And our intention is to maintain this hub and to have most of the reports, or all of the reports on the electronic way. Also, at the same time, FSA recommended that companies operating on our financial market should identify in the new context, together with an external IT auditor, vulnerabilities, and also identify ways to address the operational risk. Thank you.
Thank you very much, Valentin. It's clear the Romanian insurance industry is coping well, at least at this time, with the current COVID crisis. We were lucky and no other major risk occurred in this period, so at least we didn't have the dangerous aggregation of risks. But in other countries, look at the Croatian example for instance, it didn't happen so well. Continuing on this line of discussion, I would like to invite now to take the floor Mr. Lionel CORRE, Director Insurance Department, Direction Générale du Trésor in the French Ministry of Economy and Finance. And I'm sure he can have a very interesting contribution, as at least in our part of Europe, France is in many cases looked at a good example of good practices and maybe successful solutions in many respects. Lionel, you have the floor, please.
So I have the video, but it's on the other name, so you will just see my number, looks like. Well, we'll do as we can. It's my experience for a few months of lockdown and these kind of meetings, and most of the time we are obliged to switch to this. So I will try to be lively as much as possible without you seeing me. So what I was saying, or trying to say, is that this crisis definitely illustrates the issue, and this issue is definitely the issue of the future of insurance for our economies. This current crisis is a difficult, painful illustration of a strong weakness in our collective resilience. It affected our economy, it affected our everyday life, and it illustrates, which is the topic of today, a clear production gap. For us, public authorities. Definitely, all plans for prevention and intervention were globally not completely satisfactory. Let's put it like that. At least we had a strong public response. We were not collectively prepared enough, but we had a strong public response. Will it be enough? Will it be efficient enough? The coming months will say, but in France and in most countries in Europe, we had a strong response. We cannot say the same for insurance, and it's a very huge debate in France. It's not only in France, but it's particularly harsh in France because all the companies opened their contracts, and in half of the cases they were covered for business interruption, but in in most of the cases, they were not covered for these kind of pandemics. Our supervisor, HCPR, made a survey and issued the results a few weeks ago, showing that globally 95% of the contracts were not covering this kind of business interruption, in case of pandemics at least. And in the 5 remaining persons, it's not clear, let's say. And this answer has been considered by far as non-satisfactory for the French citizens and the French companies. And globally, this is very, very strong negative impact on the insurance image in France. But the question is more than image, is what we do with that. I talk about business interruption. I can also quote another big topic of insurance that we experience in France and many countries in Europe, and especially in Europe, which is credit insurance. It's maybe, I can say, even worse, because credit insurance is not only not be there, it's to withdraw the coverage when the crisis comes, and creating a systemic risk. We experienced that in the previous crisis in 2008, with credit insurers reducing all globally their coverage at the same time, and of course with a direct impact on our companies and the credit between companies. And we were about to experience that in the current crisis. And the answer was a very strong public response in order to support that in emergency. In many countries, in France, in Germany, in the UK, and in many countries. And this leads us to a more general debate, which is the debate that is for us today about insurance. We are more and more aware of protection gaps, which is positive at least. But insurance and reinsurance are not necessarily increasing their offers. And in some cases, and it's what your figures at the beginning of our debate were illustrating, it's maybe even reducing, which of course may justify public intervention, but it still leaves a role for insurance. And in our experience, a good public intervention, an efficient one, is one that is working well with the private sector and with private insurance. And so the question is what insurance can bring us in terms of coverage. So my first point will be the increased awareness of protection gaps. So the current crisis is a good illustration of one of in fact, 2 protection gaps, I may say. The first one is the direct consequences of the pandemics about health, personal protection, all the cancellations on which there were quite effective response about insurance, but also indirect consequences, which was business interruption. And for that, let's say that the answer was not satisfactory, which leads us to think that maybe we have other topics or other risks than pandemics that could lead to this kind of situation, or at least raise the question of the insurance coverage for business interruption, which is globally business interruption without damage. It can be, on some cases, on natural disasters, when we shut down flight traffic, for instance, when we have demonstration or some public demonstration and we shut down streets for days which of course lead to business interruption. It can be very huge incidents like chemical incidents, like nuclear incidents that definitely are most of the time not covered by the coverage and business interruption. And all these topics are linked to, in fact, one general kind of coverage, with the coverage regarding the consequences of the decision from the state or from public authorities, let's say, to protect the population in case of something. And something can be pandemics, but it can be something else. So for that, definitely, this is a protection gap that we have. And now let's say that we are very well aware of it. And we should be aware of other. Another one was also quoted today is NatCats, natural disasters. In France, let's say it's not protection gap because we, and this is a good experience that we have for almost 40 years now of public-private coverage. The public sector is reinsuring the private insurance companies with a share of 50% and then stop loss. And this led to the fact that everyone is covered for the house in France because they are covered with NatCat, and because they all have insurance, they are covered for NatCat, and they're covered for everything, let's say, regarding NatCat. This leads to business interruption for companies that is still a topic, but for what is for the damage, it's covered. But still, we have to think of the future. And even though the system is working very well currently, it worked well for the last big catastrophe that we experienced in France in overseas territories. But we are experiencing climate change. And the same way that we have, especially the big private reinsurers that are experiencing a strong increase in terms of damage and claims. This is what we're experiencing in France also. And what should we do in order to consolidate and not to create a protection gap for the future? So even when we failed it, we have to look forward and to adapt in order to be able to be resilient on the long term. Third big risk is cyber, of course. We expected it to be the next pandemics, we experienced the physical one, so the next one can be the cyber one. So definitely we should be prepared, and definitely this is a protection gap. It's covering everyone is concerned, every citizen, every company. The small businesses are getting ransomed every day, and it went on during the lockdown in France and in many countries with every sort of attacks. And it could be also, as you know, more also state oriented attacks. And we can think of other protection gaps since our way of life is changing, our way of working is changing. We are currently working from home more than we used to do. And of course, it creates a question of insurance. So this is we are getting more aware of these protection gaps, but do we close it? It's my second point. Well, the market response has been in many cases to go from silent covers to other kind of covers. What do I mean? These risks were covered in some cases without even being monitored. This is the case of cyber, and a strong action supported by the public authorities in most countries, especially the supervisors, is to get out of these silent covers and to identify the risk and to create affirmative covers. This happened in cyber. We experienced a big silent covers with business interruption because as I say in France, in the 5% that are not clear, in fact, in some cases, it's really clearly covered, and the companies most of the time were not clearly monitoring it, were not really conscious that they were covering it. So this was a silent cover. And in fact, companies can create affirmative covers, but what happens, it's also that they create no covers or they reduce their covers. In cyber, we experienced that. We are getting more and more on affirmative covers, but at the same time, and especially last year, when the corporates wanted to get covers for this year on cyber, the capacities offered by insurance companies was reduced. And for business interruption, that we know that if we do nothing, what will be that these 5% or 2% that were actually covered will just not be covered at all in the future. So, the natural answer of the market looks like to be reducing the coverage, which also creates a question about mutualization. Companies are more and more able to modelize, to identify risk, to modelize it. But of course, this allows also to identify very clearly the risk attached to every country, to every company, to every policyholder, and this can be to demutualization. And if you demutualize, this is not insurance anymore. How we deal with that? So definitely there is a question of the role of insurance tomorrow. If insurance is just not covering at the same time that we are getting more aware of the risk, and if they contribute to demutualizing, and which is exactly the contrary of insurance. So one, this will be my third point. One answer, definitely, and I share what has been said by most of you before, that we need, and there is a necessary public action, definitely. On this kind of risk that we are talking about, at least part of this risk is definitely, or at least currently, not insurable. And this is legitimate that we act. We can act in two ways, in fact, and I think that in most cases we should do both. One aspect is regulation. We should regulate or make our regulation evolve, put definitions. We were talking about taxonomy. Taxonomy is a way to, in fact, foster coverage because we are talking the same language, because we are identifying what should be a coverage for these emerging risks or these risks that did not used to be really identified or covered by insurance. This is very clear for cyber, for instance, and to develop cyber coverage. And we have also to answer the question, should insurance cover ransoms or not, or how, with answers that are very different from countries to others, and most of the time rules are not very clear. And when the rules are not clear, this is definitely an obstacle to the growth of the market. So this is one side. Other side is definitely a risk sharing. When the risk is uninsurable, part of the solution should be by transferring it to the public sector, sharing at least. And I say sharing. If you take a few examples, NatCat, this is what we have in France. It works well like that, but it's adapted to NatCat, and what we have for NatCat is maybe not adapted to other risks, like business interruptions, for instance. We are exactly today, we published the report of the work we've done with all stakeholders in France, so companies, insurance, reinsurers, regarding business interruptions in case of pandemics. What should we do in the future? How can we should cover it? And definitely we do not have the solution, but we at least have done a few I would say assessments, and one of them is that definitely we do not have a solution working for something else that we should obviously replicate, and for instance for NatCat, because we are talking about something definitely different with no continuum of perils like we have in NatCat. We are not talking about damage, we are talking about financial compensation. We do not, in pandemics for instance, we did not have this regional aspect that we have in NatCat. It can cover everyone at the same time. So definitely it's not adapted, and we need to find other solutions, but we need to find them, and any solution obviously will involve a way or another the state. Third example, credit insurance. This is what we've done in the two crises. In fact, what we are doing is we are acting just in terms of crisis, but definitely doesn't look very satisfactory from the public sector, because when everything is okay, when the economy is okay, we're not there. the economy is getting bad, when we have a crisis, we are in emergency putting a lot of public money. So this makes us think that things may evolve in order to be more satisfactory and to have a better sharing with the private sector. And last example is cyber. Definitely there is question of regulation, but part of the risk, especially when we're talking about cyber war, this leads us to think that maybe we should deal it like we do for war, so something on which the state should be involved. But the question is where you put the border, which is a very complicated question, and the answer, once again, is not very obvious. When we talk about public sector, we should immediately think also about the dimension of the public. Should it be national? Should it be international? When we're talking about this kind of risk, the risk and the perils look really international, or at least really regional, and to have a regional or even international approach, of course, looks fruitful. The big reinsurers are international, and if we talk the same language, if we're talking about the same coverage, for instance, for cyber, in all over the world, or at least in Europe, this should be fruitful, but we are not there yet. Which leads us to my conclusion. For the role of insurance, what works well, for instance, in NatCat, is that insurance is bringing something on the table. We are sharing the risk, and there are the smaller risks that are taken by insurance, and when it gets bigger, we share it, and then the state takes the big ones. And in fact, for all the protection gaps that we identify and that we will go on identifying, or which we will be working on the coming years, insurance should bring something, should bring a coverage, should bring capacities on the table. I say that because, for instance, in France, when we had the debate on business interruption in case of pandemics, the insurance companies, the insurance companies, they proposed to put 2 billion on the table. We are talking about something that costs, in terms of business interruption, for France, something like 150, 200 billion. So 2 billion, 200 billion. Obviously, if then we see a share between the state and the insurance company, we're not there yet. And we do not see that as something that can be satisfactory. And obviously, the citizens are waiting for a bigger answer, a stronger answer from the insurance sector. So definitely, this question of increasing enhanced relevance is key, because at the end of the day, this is the very core essence of insurance, to be there, of course, in terms of resilience and to bring its solution. And solution is mutualization, because otherwise, other will fill the gap. It can be the states, it can be the companies themselves, so we leave the risk in the society, or there are currently other ways to cover risks. Financial markets, banks are covering risk. They bring something else, but they cover some risk. And at some point, if the insurance is not there, when our companies, when our citizens are asking for protection, when we public authorities, we want to build public to share this risk and to bring something from the state on the table, we need the insurance company to bring something on the table. So this is food for thought, and definitely this should be one big question about the role of insurance for tomorrow. Thank you very much.
Thank you very much, Lionel. I'm happy that in the end we have managed to establish this connection well and to hear you, because it was quite inspiring. And I think that maybe the most optimistic or the good part that we can remember from this is that it's good that we are finally all aware that we need to talk and cooperate at all levels and in all ways possible. Well, we are changing now the teams, going from the policymakers teams to the really market players, and try to see their perspectives on the topic of today. And we are also changing territory, moving in the eastern part of the world, in Asia. So we will start with Mr. Makoto OKUBO, Director of International Affairs for Nippon Life. How do you see and what is your opinion on the topic we are discussing today?
Oh, thank you very much. I'm very honored to have this opportunity to talk on this matter, and I'd like to thank Bogdan for inviting me. So as you know, Romania and France are both countries that I had a long-term friendship with, and I'm very, very happy to be here. And every time I speak for the United Nations, it recalls my childhood because at the age of 10, already I had a dream to work with United Nations, and I invited children at home, and we discussed about air pollution, water pollution, and world peace. In a sense, I have been working for more than 50, maybe 45 years on SDGs, although the word SDGs did not happen. So I also chairing the working group in APEC to promote sustainable and resilient and inclusive development of the Asia Pacific region. So I'm very happy to share this perspective. Today, I'd like to share what's going on in APEC and also some share Japanese case studies, as well. As a very rare Asian speaker, I'd like to introduce what we can learn from the ancient philosopher to deal with the sustainable issues and the resilient issue. So this is a progress report last year, and we are working on the finalization of the progress report 2020 to APEC finance ministers. And that include relevant topics, including disaster risk financing and insurance. It's led by Masaaki-san, so we will hear Masaaki-san on this. But there are other aspects which are also related to the subject, such as microinsurance, circular economy infrastructure, sustainable health financing, and also sustainable and ESG investments that I chair myself. So sustainability and resilience are two parts of the same coin, because the resilient discussion is dealing with the disaster in front of you, and sustainability dealing with a massive potential disaster in the future, maybe in the next generations. So we have to cooperate today to deal with both disaster potentials. And then this is a kind of the situation. So if you still think that insurance business is to pay the money when something bad happens, it's no is my answer. It's already gone. Those times are gone. Now insurance companies are competing each other to make their customers healthier and happier as much as possible. This is a current business paradigm. So in addition to protection, we are focusing on the 3P: protection, prevention, and preparedness. So this is that characterize the recent insurance business. For example, it's somewhat like a cyber insurance. So when you buy cyber insurance from non-life company, so non-life company would give you advice how to protect yourself against the cyber attack. This is why the people are buying. So now the insurance companies are giving a lot of services to make sure that their customers are healthy. And insurance companies and the insurance customers are buying insurance not because of the money you get when you die or you get sickness, that they are buying the products to receive services. For example, in some companies are focusing on a very healthy people, but for example, our company tried to capture a many different level of the people, including not the very healthy people, because it would be in line with somewhat like the diversity and inclusion concept. And teaming up with the hospitals or strategic alliance to make sure that we are trying to prevent them from becoming a sickness. So any kinds of innovative strategic alliance that we are working on. For example, this kind of things. Talking about COVID-19, of course, you're talking about how the payment will be done. We can get the moratorium for premium, but more bigger contribution from the insurance industry is actually to keep them healthy even under COVID-19. So the next is about a disaster. Of course, we are working on a disaster. Japan is very somewhat renowned for huge earthquake. We have earthquake almost every year. So, and then we are just sharing our experience to help APEC economies to prepare better. In terms of disaster risk financing instruments, there are some of the topics that we are working on. Developing sound financial insurance market, like in addition to cat insurance, also we are working on cat bonds. Masaaki-san is very, very familiar with this, but we are working on many different tools. In Japan, for example, for more than 100 years, we believe that the catfish and the little fish has a supernatural part to foresee the earthquake in the future. So there are some people observing the motion of catfish to foresee the future. So I would say 3 different alternatives for cat insurance: cat bonds, cat swap, you can swap the cat risk, and catfish. But Asia Pacific Financial Forum is dealing only on cat bonds and cat swap because catfish is not financial in nature. Also, we are working on the data. For example, we use the data to prepare the people better. For example, we are talking about how the infrastructure and buildings are resilient against disasters. For example, in Japan, we have a magnitude 6 earthquake almost every year, but the victim is almost 0 nowadays. So the buildings are very, very strong. And the life insurance company hold a lot of real estate. We make sure that our building will be sustainable and also resilient. And we are having the private-public partnership and collaboration. And in terms of lessons learned from our experience, we are trying to help the people, not just pay the claim, but our agents help the people to be identified when the earthquake occurs. We, insurance industry, help them to identify who's alive, who's dead, because all agents have 100% in charge. They are their responsibility to find them. So we got award from the Prime Minister for this contribution that enhanced tremendously the reputation of insurance industry. So this is a kind of very important matter. Insurance business is not the automobile or computer or maybe like a fashion industry. There's nothing visible. So trust among the consumers are prerequisite to fill the protection gap. Also the orphans. So for example, there are so many children who lost everything, like house, parents, money. So only things left was a hope for the future. That was provided by the life insurance money. But if you pay the money to the 8-year-old boy, which is the only survivor, do you think our job is done? We did not think so. So we team up with a legal profession and we provided the system that we make sure that the money we pay to those children will be used exclusively for this child. So this kind of arrangement enhances the trust because the people buy life insurance because they love wife and children. We have to, this is a profession to transfer the love from one generation to another, and we just help them this. So digital technology, artificial intelligence, that will probably help us to bring this kind of new innovation. So if this is happened because of the huge number of the victims in the earthquake, as for the exceptionally, but we can build the more trust and the more resilient society by using a technology. AI is love in Japanese language, I. So we have to make sure that technology should be used for the good reason. And then lastly, I'd like to share some of the Taoism. I believe that the Taoism, yin and yang, we can learn a lot. To bring the balance of the yin and yang to the universe would be the answer for those. First, the Taoist says that be aware that the world is cyclical. So there is a good time, a bad time. So it's always, the world is cyclical. That's why the Asian people tend to be encouraged when the crisis remain. And we are cautious when the prosperity arises. This is why Asians are happy nowadays. So important thing is that regulatory requirements should incentivize the investors to make decision which is good in the long run rather than look good at a given moment. So this is very crucial for sustainable and resilient activities. Taoist says, don't go to the extreme, otherwise you will fall. So you have to bring the balance of yin and yang. You have to balance risk and rewards so that the investor should invest in assets with long-term growth opportunities. If you just penalize the companies which invest long-term by just looking at the risk, so you just match your assets and liability in the short term, and you lose tremendous opportunity to grow. That's bad for the community because you cannot get the money from the insurance industry to develop the society. And Tyler says that to manage the world, you should control yourself. To avoid one-size-fits-all and take into account diversity. You cannot transplant your organs without knowing your blood type. You have to know your own country. The crisis in Japanese character have two characters. One is danger, next one is opportunity. So it's a danger, but it's an opportunity to collaborate and to change for the future. So this is my last page. So my name is Makoto, and you can send me any email to ask any questions. And I'm also using music to promote ESG and SDGs. I'm now creating the musical show for the education purpose on the cat bones and resilient infrastructure, digitalized supply chain, and how we can build the sustainable development. That concludes my remark. Thank you very much. Muchas gracias, merci beaucoup, and mucho mescu. Thank you.
Thank you very much, Mac. It's very pleasant and touchy to see that insurance can be looked at not only from a financial perspective, but also from a heart one. And that the industry, in fact, has to support people not only by reimbursing their losses in financial terms, but also helping them really to act in a situation of crisis. It's a very human perspective, and it's nice to think of it. The second speaker, coming from the same geographical area, is Mr. Masaaki Nagamura, representing Tokyo Marine. And I would like to invite him to take the floor and give us his thoughts.
Well, thank you very much, Daniela, for the kind introduction. And thank you, Bogdan, for inviting me to your session. It's a great honor to be here and to speak in front of this great audience. My name is Masaaki Nagamura, and I work for a Japan-based insurance company called Tokyo Marine at its headquarters, corporate headquarters in Tokyo. Obviously, I'm calling from home. It's about 3 o'clock in the morning. And I normally wake up at around 6 a.m. So
thank you for your effort.
So forgive me if I go wrong. But in any event, my role at Tokyo Marine is to engage various international initiatives that has to do with climate change, disaster risk reduction, or sustainability, and I represent my company in that regard. And for those of you who are not familiar with Tokyo Marine, it's the oldest and one of the largest property and casualty insurance companies in Japan. Now, I'd like to touch on 3 points. The first is how SDGs is taken in Japan, and second, how what I think we can do more to make the society more resilient, and thirdly, just to brief you on what we're doing at APEC. So starting with the SDGs, in Japan, just to give you a quick snapshot, SDGs have gained quite a significant traction over the past couple of years, thanks in part to the government promotion. Government offices, both on the national level as well as on the subnational level, are increasingly featuring SDGs to attract the attention of key actors, especially those in the younger generation, who can bring change to society. So, you know, you see a lot of competition among local governments about how they're doing good on SDGs. And corporates are following that, that trend. They're really appealing what they can do and how they can contribute better with respect to SDGs. Now, within Tokyo Marine, my company, sustainability has been at the core of its operation, and I think we didn't need to wait for the arrival of the SDGs to work on social issues, including climate change and environmental conservation. What we're doing internally is to encourage each staff to participate in social contribution activities at least once a year. We think that it is important to have our people stay connected to the local community they belong to. We also conduct a group-wide annual CEO recognition for sustainability, which is carried out on a global scale. And it is meant to be something that to recognize workplace which exercise notable engagement with the local community to counter relevant social issues, whether that be fighting poverty, reducing drunk driving, restoring natural habitats, enhancing financial literacy, and the list goes on. I think the initiative offers a good opportunity for staff across the board to learn about what we're expected as an insurer under the SDGs and what value we can deliver to society. So that's pretty much what's happening on SDGs. So let me move on to discuss further on what we as an insurer can do to increase resilience of our society. I find the topic increasingly relevant as the world faces a serious threat from COVID-19, as many discussants have mentioned. It is unfortunate to see that the insurance industry is criticized for its limited visibility to contain the economic losses suffered by patients and their families, as well as industry players, especially those that are categorized as SMEs. But I strongly believe that insurance can do much better. If designed properly, insurance functions as an effective social mechanism to reduce financial risks from individuals or organizations. When it comes to disaster risks, it reminds me of Japan's horrendous experience and from the heavy earthquake and tsunami that hit the northern part of Japan back in 2011, the March 11, 2011 earthquake and tsunami. It took the lives of approximately 16,000 people and damaged more than 1.2 million structures. In the aftermath of the event, the insurance industry did almost everything it could to help expedite the claim payment for earthquake insurance, which is organized as a public and private partnership between the national government and private sector insurance companies. I think overall, within Tokyo Marine, in case of Tokyo Marine, we mobilized more than 9,000 workforce to really deal with the claim. Starting from sending materials and food to the devastated location, to the devastated district, as well as helping our claim office to expedite the claim payments. And I was one of them who were called to help the call centers, the 1-800 call centers, to communicate directly with the devastated community. Now, the insured loss under the system turned out to be around 11 billion in US dollars, covering over 780,000 households. But what is more, 90% of reported claims under the system were settled within 3 months of occurrence, which is considered remarkably fast. So the insurance payment was arguably the first financial benefit to reach the devastated localities. We assume that it helped the affected local communities to recover faster. So the story is indicative of how an established disaster risk insurance system can play an effective role in building a resilient community. So you may wonder why such system cannot be implemented in other countries, especially those which are developing and also prone to natural disasters. And there are many of them in the Asia-Pacific region. So that's exactly what I'm trying to advance in the Asia-Pacific Economic Cooperation, namely APEC. I have been serving the APEC's finance ministry process as a private sector representative of its disaster risk financing solutions working group for the past 5 years. Now, last October, when the APEC finance ministers convened in Santiago, Chile, which was the host economy of APEC last year, they agreed to study the feasibility of implementing catastrophe bonds for their interested member economies. Now, this was prompted by the implementation of similar cat bonds by Latin American countries, namely Mexico, Colombia, Peru, and Chile, which formulated catastrophe bonds focusing on earthquake risks. And that was launched 2 years ago, and that captured a lot of attention of the finance ministry officials in the APEC region. Why don't we have one for APEC? So that was the concept. Now, cat bonds has a lot of attractive points for investors these days, because it is almost no correlation with the general financial markets. It is considered as a lucrative investment tool, and with the arrival of the COVID-19 situation, there's a question of whether the study should include pandemic in the scope. Now, obviously, this will make the discussion very complex and very difficult, but we'll see how the discussion goes. We are there to serve the finance ministry officials about how they wish to design a meaningful and effective mitigation mechanism for their economy. So more should come over the next couple of months as we move on towards this year's finance ministers meeting in Malaysia. So regardless of which way the discussion will go, we can't waste time in designing a meaningful program to help contain the threat of disaster risks, including COVID. But I bet that this is not the only region with the feeling the need of such a system. So I'd be interested in seeing a lot of similar type of discussion taking place in other parts of the globe as well. So that is what I have for me. I thank you for your attention, and look forward to having a continuous dialogue with you. Thank you very much.
Thank you very much. Also, you have, especially because you have also made a big effort to join us at such an uncomfortable hour. And we will move now to our following speaker. In fact, we will have a video recording from Mrs. Selva Eren. She is General Manager of Turkey Assurance. Turkey Assurance being a newly established reinsurer in Turkey, but an entity that I think will have a very big relevance, especially in an area with high exposure to nat cat risks. I would like to ask my colleague, Mihaela.
I greet everyone with respect and love. My name is Selva Eren. I'm the General Manager of Turkey Assurance. It's very valuable to take part in this special conference. I thank all those concerned for their invitations. Very important news of the industry share valuable information with us on this significant topic today. First of all, I would like to talk about our company very shortly and briefly. Turkey Assurance was established by the Ministry of Treasury and Finance to contribute to the development of the insurance sector, to increase local reinsurance capacity, and to provide resource efficiency. In the 10th month of period since our establishment, we have provided capacity to the market in a significant volume by responding primarily to the reinsurance needs. In addition, we provide a very important capacity to our country's agricultural insurance pool, and we undertake the technical management of another pool, which is TCIP. TCIP is compulsory earthquake insurance pool provided by the Turkish government. Its objective is to ensure the compensation of the material damages on houses caused by earthquakes and the fires, explosions, tsunamis, and landslides that are caused directly by the earthquake within the limits of your policy. It serves as a model for many countries in terms of how the public and the private sectors can cooperate to finance disaster risk, basically. In line with the collateral size we provide to our policyholders, we have the capacity to pay 20 billion Turkish liras of damage due to our earthquake reserve and reinsurance facilities in the face of a major earthquake. We consider this payment capacity, which is created completely independent from the state resources, to be able to ease the burden on the public budget in big earthquakes. When we evaluate today's agenda item, these two pools are two very important structures for protection. I will try to share my thoughts with you about today's topic within the time which is allocated to me. First of all, we need to define the insurance gap very well. And then we have to analyze the reasons that make the gap occur, and also we should think about the potential actors of the solution. The most appropriate definition of insurance protection gaps is the difference between the amount of insurance that is economically beneficial and the amount of coverage actually purchased. Afterwards, identifying the causes of a gap one by one, we will enable us to determine the solution we will reach in a much healthier way. GDP, which rises at a certain rate globally, especially in developing economies, reveals new assets and of course new risks. In addition to this increase, we witness that the share of the insurance sector in the GDP has lost its power. In addition to this, the extent of the loss that occurs as a result of pandemics that we live globally right now, natural disasters that increase in frequency and severity, and other disasters increases very passing period. As mentioned in the disaster risk finance report of Swiss Re, the economic cost of natural catastrophes has increased remarkably. In the 1980s, and the inflation-adjusted cost of natural catastrophes averaged about $30 billion per year. In 1990s, this increased to 104 billion USD per year. Over the last decade, economic damage grew to average 190 billion USD. In terms of the percentage of the gross domestic product, economic losses from natural catastrophes have also gone up. I would like to explain my thoughts actually on solution ways with two different parameters. First parameter is individuals, especially with the inclusion of new generation in economic cycle, technological developments. We see the needs are changing and the world demands behaviors of the individuals are totally changed. This reveals new assets, new risks, and an insurable potential in this context. Therefore, the need of pragmatic shift of the insurance industry clearly shows the sector should respond to these changes with new products, new guarantees. That is, should be keep up with this change. In this way, the individuals and the potential of destructive changes of the individual's life to create gap should be minimized. Our second parameters are companies and the governments. The best way of governments and the public administrations to spread the risks, shoulder the costs of natural disaster, and ensure a swift recoveries to support the development of healthy insurance markets. However, many countries lack formal insurance programs for catastrophic losses and seek the funds to pay the recovery after a disaster has taken place. Risk prevention and mitigation must be the first priority in managing natural disasters. Hazard mapping, physical protection measures such as comprehensive building codes, for example, serve this purpose. Such measures also save lives and protect infrastructure. Transferring catastrophic risk to enable and sustain growth must therefore be a key element in financial strategy of every disaster-prone country and should ideally be a part of an integrated risk management approach. Today, there are a variety of initiative partnerships that can act as models for other countries to embark on risk financing strategies. These range from macro-level solutions for individual countries, pool schemes that brings together regional entities facing a similar risk, as well as micro-level schemes to make insurance directly available to individuals. As I mentioned before, TCIP serves as a model for many countries in terms of how the public and private sectors can cooperate to finance disaster risk. To summarize, this gap exists in our lives as a global problem. With the changing world, changing risks, changing human behavior, habits, and all these, changing beings should be set as an emotion. We must respond to these changes by changing. However, I think that the number of new pool structures to be established with the cooperation of countries should be increased very soon. Thank you very much for listening to me, and I wish you all a pleasant and a very productive conference. Thank you.
Well, I'm sorry I cannot thank directly to Selva because her intervention was very inspiring. It's I think very good to see that although people are all, in general, looking backward when trying to assess future challenges, basing their assessment on experience. It's refreshing to see that there is also this perspective of looking forward to the changes, to the new generations, the new needs. And I think this will play an important role, especially considering that Turk Reassurance, for instance, is managing the Turkish pool for earthquake insurance, which is an entity with a very, very important role in ensuring resilience, catastrophe resilience in Turkey. We will for sure hear from them in the future too. And now we are reaching our ending speech, and we will return from the insurance players again to a person with a broader view, Mrs. Chloe Dembrovsky. She's president and CEO of the Re Institute International and member of ARISE, the private sector alliance for disaster resilient societies of the United Nations Disaster Risk Reduction. So I think she will offer us a more global approach on the topic of our meeting. Please, Chloe, the mic is yours.
Hello to my esteemed colleagues. Bonjour, konnichiwa, salud. Pleasure to be with all of you here right at the end. So I think it's helpful to provide a little bit more context about Disaster Recovery Institute International and the role we play. So we're a nonprofit institute that was founded in 1988. We train and certify disaster recovery, business continuity, and cyber resilience professionals. These professionals who hold our credential, they live in over 100 countries. They work at 95% of Fortune 100 companies, 21 of the 25 largest global companies. And we have offices in Japan and Romania, many other countries besides, where we provide this training and try to connect this network of resilience professionals. Because what we're trying to do is strengthen and encourage organizations across the private and the public sector to be more resilient internally. For us, insurance is a very important tool, but it's just one tool. The key is to be resilient and to be prepared as an organization in the event of some sort of risk or threat, something that actually occurs, to deal with the impacts of that incident. So we often talk about how risk managers are charged with dealing with causes, and business continuity people deal with effects. It doesn't matter so much what the cause was, we have to deal with the effect and find a way to continue to provide our core business under new circumstances or changed circumstances. I was pleased to hear some of the comments about business interruption insurance that were mentioned earlier. I had a really interesting conversation with the CFO of FM Global maybe a couple of months ago, and he was talking about exactly this, saying that, I think every business in the world felt that they had a valid claim of business interruption because of COVID-19. Everyone was impacted in some way by shutdowns, lockdowns, all of these things, and pulled out their policies and realized that either they were lacking pandemic, there was an exclusion for pandemic, it wasn't mentioned, and that in some cases is being tried in the courts, challenged in the courts, or, as he said, a lot of our clients do have this coverage, but you have to have a demonstrated discrete event at your facility. So you actually have to have COVID-19 at your business place of work, and then you're covered. But just having been shut down because you might get COVID was not grounds for business interruption insurance. So I think these battles will continue to be fought, but the point is that really insurance should be the last ditch tool. There are so many other things that businesses can do to be more resilient and to be more prepared. And I think by and large, we see that some organizations have done well, have been prepared. Some got lucky because their business model was just more viable in a pandemic, like Zoom certainly is flourishing. But I think a lot of organizations were just caught completely unprepared and unaware for how to shut down, for how to reopen, to how to protect everyone, and how to respond nimbly. And that's a real challenge. I think what we will see in the future is that COVID-19 is a dry run for the kinds of challenges that we will see with climate change, which is the next kind of global systemic risk that we'll be facing. But we also talk about and deal with all of the other challenges. Cyber resilience was a big one in our community over the last few years. We've certainly been spending a lot of time and energy on cyber, whether it's insurance, but also just making sure that businesses are prepared in the event of some sort of disruption. We deal less with the information side and more with the business side of what happens if you can't access your technology, or if you have an intellectual property concern, or if you don't really know how to handle GDPR. So these concerns have not gone away just because we're dealing with a pandemic. That we're dealing with a multi-hazard environment. There are all kinds of risks that we face, and organizations need to be putting resilience and risk at the core of everything that they do, considering it and weaving it into their strategy, because it's far past the time when you can think that it's just something, an act of God, or something that happens once in a while. Especially as a global company, something's happening all the time, and you can't just rely on insurance to kind of bail you out. It's a tool, it's a useful tool, it's an important one, but again, it really is up to the business of the organization to be more resilient. I think what we'll also see is as this pandemic continues, we'll see cascading impacts, lots of related things. We've already seen some with the social unrest. We'll see challenges with hurricane seasons. How do you evacuate, for example, a community while observing social distancing? This is a big challenge that I know is keeping many up at night. And then, of course, when we go into the colder months and we have influenza season again, there will be a lot of challenges there. So all organizations need to be thinking about this and planning for it effectively and making sure that now they don't put all of their resources just into COVID-19, but to think about how they can focus on impacts and come up with the broadest strategies possible to protect their organization and to be resilient no matter what the challenge or the risk that they face. So I hope I've given you a little cause for optimism and something of a to-do list for how to feel a little bit stronger as we move forward in these very uncertain times. It's been a pleasure, Bogdan. Thank you for having me. Pleasure to meet you all. And hopefully we'll get to do this in person someday in the very near future.
Let's hope. Thank you very much, Chloe. Well, Chloe's intervention has ended our list of speakers for today. My image at the end of our meeting is that building resilience is like somehow building a big puzzle with maybe thousands of pieces. And I'm sure that insurance holds a pretty important number of these pieces. And if you are missing them, you can see the big picture, or at least not see it correctly. So we have work to do for the coming years and for a better future. This being said, I am thanking you also for your contribution and for your patience and for your effort to join us. And I'm passing back the floor to Bogdan for the concluding remarks. Bye.
Thank you, Daniela. Thank you, my very dear and esteemed guests, colleagues, partners, friends. Thank you so much. Thank you for being with us. Thank you for sharing all your thoughts, insights, inspiring insights. I really appreciate. I don't want to leave it just like that and finishing this this side event just by saying thank you. I want to commit to something in the very near weeks and especially months. With all the material we have, with whatever has been shared here with us, we are going to prepare a document and circulate it at the highest level. Of course, in September, around the AG General Assembly at the UN, there are a lot of events, especially with the Climate Week, virtual or there. We'll figure out. And even above, we have in mind to bring that at the G7, G20, and G77. I think it's something really very important. A lot of topics have been raised. I will not going to go through a long list of keywords or ideas. Everything is there, whatever you have said, but just be sure that we are going to bring that at another level and keep this alive in all the circumstances that we will have in front of us. Thank you again to all of us, all of you. Thank you for being with us, for taking time, and I really hope to meet with you in the very future, in present and in front of each other. Thank you very much. Thank you.